Welcome to the Meaningful Ideas Trading Club. This is our weekly event that we put on, brought to you by Howley, Kaufman and Kautzer, HKK, lawoffices.com. A little bit just about ourselves. We're lawyers that are focused on family law, criminal law, traffic, personal injury, bankruptcy, estate planning, and landlord services. The Meaningful Idea Trading Club was started as a place to share ideas on personal development and business development. Some general concepts in here that we're vulnerable. We like to exchange energy. We are open-minded about ideas. We believe in these three things, though, that there's a treasure out there, that you are going to find it, and what you're looking for is worth it. Specifically, we do like to focus on local businesses. We're kind of crazy about the concept that you can have things like a sausage maker or a toilet maker that becomes an international brand. That's Johnsonville and Kohler. All right. So with that, today we have a really special guest, entrepreneur, Michael Morawski. Mike, I'll give a little intro and I'll let you take it away because you got a great story. So Mike, you're a 30 plus year veteran in real estate investments. From what you've told me, you've controlled over $285 million in real estate transactions. That's amazing. You're an entrepreneur, an author, a real estate trainer, a public speaker, and a personal coach. You got a lot going on. Does it say in there, and a host of a podcast, right? So tell us, Mike, thank you for being here. Welcome to the Meaningful Ideas Trading Club.
Hey, thanks, Kyle. And Ryan, I appreciate you guys having me on. It's always good to be able to come on, share some experience and some knowledge to be able to help people see other options and opportunities in their own life to grow.
So Mike, if you want to just I'm not as familiar with your background. If you wanted to just give a little bit about your background, who you are, and what it is that you're kind of give an outline, but what it is that you got your hands involved in today.
Kyle said I've been in the real estate business for 30 years. I started out as a residential sales agent, and it's funny how I got in the business. I've always believed success leaves clues. And I woke up one morning, I had a general contracting business in the northwest suburbs of Chicago. Woke up one morning and I was just burnt out. I was still banging nails and had too much going on, and looked at my wife at the time and said, hey, I can't do this anymore. So I decided to sell the company, sold my company, took a year off. And during that year, I did a couple of fix and flips. I bought some a 2-flat, went and fixed it up, and resold it. And this was long before fix and flips or house hacking was the sexy thing to do. Now everybody does it, right? Even at me because of the nails on the floor, So, but along the way, I met a real estate agent that was really successful. And I went to him one day and I said, hey, Todd, I think I want to go in the real estate business. He goes, man, I think you'd be good at it. He goes, you have some skills that I think if you develop them, your sales skills, I think you'd be real good. So I said, well, listen, could I shadow you? And he said, no. And he said, I'll do one better than that. I'm going to make you a cassette tape. And now I'm dating myself sure, because I don't think you can find anything to make a cassette tape on today,
Well, we just played a clip from 1982, so remember that.
I was going to comment on that technology, but the quality of the video versus the quality of video today, is that crazy? How old that was? Yeah. So it was pretty interesting to watch that, though. So he made me this cassette tape, and I listened to it over and over and over again. And like I said, success leaves clues. So I adopted those small fundamentals that he had outlined on the cassette tape for me, and went in the real estate business. My first 9 months in the business, I sold 78 houses. I was RE/MAX Rookie of the Year. I went on to build a team selling 125 homes a year. And in 2005, I saw the market starting to shift. And I knew I was going to have to go do something else, or I wasn't going to be able to keep the same income source and keep my team together and do the things that I was currently doing. So I decided to go in the apartment business. And I didn't just wake up though and say, hey, I'm going to go in the apartment business. It was something I had looked at over time. I had done a lot of work for a large apartment syndicator in the Chicago market. and watched what they did. So I understood this. I understood the private equity model, that you could raise private equity from individuals, you could marry it with a great real estate deal, stay in the middle, and as long as everything went well, everybody made money and there was great success to be had.
Yeah.
So I went out and I syndicated my first deal. I put a deal together. I went and raised money and ran that. It was a little 11-unit apartment building outside of Chicago. And from there, I went and raised $18 million in private capital. I bought $60 million worth of real estate. It was 4,000 apartments in 5 different states.
Wow.
Did that in 30 months and built a property management company managing 7,500 units. And today, as a result of all that experience and knowledge and some mistakes and stumbles along the way, today I'm in the coaching and training space and try to teach people and give back.
Yeah. Wow. That's amazing. A couple follow-ups, Ryan. I'm sure you've got some follow-ups on that. First off, Mike, where are you located today?
I'm in Chicago.
And so that's really where you got started with the investment side of real estate. Is that true?
Right. Yeah, I've been in Chicago forever. So.
Okay. And so we might have people of all different levels in the room here today. Just a couple of things, like when you syndicated your first deal, just tell us basically, real basic, what does that mean?
Right. Okay. So a syndication is when you bring together a number of people in different disciplines to help you put together a piece of real estate or a real estate investment. So I was what they call the sponsor or the syndicator. I find the real estate, I figure out the business plan around it, meaning I have to go raise private equity. I have to get the documents put together. I have to find the management or manage that real estate myself, bring the private equity in, go get the mortgage. Now we close the deal, we run it and operate it. So I'm the guy who brings all the moving parts together as the syndicator. Syndication is nothing more than just a grouping of people that are put together to move a real estate investment forward.
So Mike, what were the challenges? What happened to you? Because everyone had, Mike Tyson said this, everyone has a plan until you get punched in the face, right?
I love Mike Tyson.
Yeah.
So you're right. Everybody has a plan till they get punched in the face. And, I look at business today and I look at life today, like not if you're going to get punched in the face, but when, because you're going to, something will happen, sometimes more drastic than others, but something's going to happen to you. I remember years ago, I think it was Donald Trump who talked about not if you get sued, but when you get sued. Then you really know that you're in business for yourself. And that's the easy side of business, I think. So here's what happened. I bought all this real estate. I bought it in a really short period of time. I was over leveraged. I grew way too fast. In 2007, I closed 17 real estate deals to buy 2,700 units. We didn't take time along the way to stabilize those, to build into them, to re-tenant them, to put a good foundation underneath them. I just kept buying property. And along the way, I kept growing my company. Yeah, before I knew it, I had 138 people working for me.
Wow.
Now, I say that because it was great to do all that, but way too fast. I was very unstable. It was like I was sitting on a four-legged chair, only on 2 legs, trying to pick my feet up off the ground and, sit there. So, I was over leveraged. I paid too much for properties and I didn't pay attention to the details and the things going on around me. So as a result of that, 2008 came around. 2008, we hit the worst economic crisis the country's ever seen. It was like plowing into a brick wall in a freight train at 200 miles an hour. I remember sitting at lunch with my CFO and where the news happened to be on. And I said, they were carrying boxes out of Lehman Brothers by the dozens, right?
Sure.
And I looked at him and I said, man, we're screwed, aren't we? He goes, yeah, we're in big trouble. So it wasn't much longer that we came off the rails. And we came off the rails because apartments are funded and kept operational by NOI, the net operating income. That's how much money comes in from the rents that gives you the ability to pay the bills, and then what's left over to pay the mortgage or the debt on the property.
Mhm.
And what happened was people started moving out. We were in markets where the car industry was really heavy, or the transportation industry was really heavy. And as a result of those heavy industries, people moved out of properties, people moved out of apartments, people went home, people stopped paying rent because they lost their job. So revenue went down. We weren't able to pay bills.
I want to know, were you intentional about those markets? I mean, obviously you didn't pick them when the people were leaving, but before people left, were you intentional about picking some of those markets?
Not necessarily, no.
Okay.
I didn't pick those markets because they were the car industry or the transportation industry. I picked those markets because at the time there was good solid rent growth. There was good stable population. Here, I bought a property in Anderson, Indiana. When I bought the property there, it was the #1 city in the country to raise a family in, according to a Forbes report. Within 9 months,
People here might dispute that, but
yeah,
yeah.
within 9 months, it was bottom of the list, right? I had my property manager call me on a Monday morning from that property and say, hey, in tears, I don't know how to say this. She goes, I have 32 I have 32 moving trucks in the parking lot, and I don't have a scheduled move out for 45 days.
Wow.
So
Wow.
it was like, that happened all over the place. So as a result of people moving out and the revenue dropping so drastically, we weren't able to pay the bills. So I had properties that were heading towards foreclosure because they were in such bad shape financially. And, I've always been a guy that I don't want to bring any bad news to anybody. I don't want to tell anybody there's a problem or there's an issue. I want to make everybody think everything is great and going well and we're going to be fine. Well, I took that a little too far. So as a result of all this, I had properties that were doing really well, but then some that weren't doing well. And I thought, well, listen, I've been in recessions before. I've seen recessions where the market's corrected 10%, and it's only lasted 17 or 18 months. This thing corrected 40% and lasted 7 or 8 years. So what I started to do is I started moving money back and forth between companies. I would take money from a profitable company, I'd move it to a non-profitable company. And I was advised by my attorney and my accountant, they said, that's okay as long as you leave a note in between them, which we did. So we were structured, paperwork wise was fine. Here's the problem. I didn't tell my investors what I was doing. So for non-disclosure, I wound up being charged on wire fraud and mail fraud charges, and ultimately sentenced to 10 years in federal prison.
Wow.
So got wiped out, lost everything.
Right there, it's like, the ball kind of drops, right? I mean, that had to have just completely shaken you to your core. I can't even imagine kind of the panic, the alarms going off, the thoughts that you're having. Did you end up serving 10 years in prison?
No, I served altogether about 8 years and 3 months.
Okay.
I was behind the wall for 7.5 years, came home, spent some time on home confinement. And it's interesting, you go from living this lifestyle of being the neighborhood baseball coach and soccer coach and MD and being home for dinner at night, and living in, and I lived in a modest home, I didn't fly private. I didn't buy a boat. I didn't have big houses or a vacation home. I plowed everything back into the business, knowing that in 10 years, I could sell my company to a hedge fund, or thinking I could sell my company to a hedge fund and ride off into the sunset, and my wife and I could play golf for the next 20 years.
Yeah.
So that was the goal, right?
Okay.
And what happened was the markets just shifted so drastically that we lost all that revenue in that.